So last night in the Parliament there was a vote, and in this vote members of Parliament who are against us leaving the European Union voted to take control of the government's agenda for today. And normally in Parliament, the people in power, the government, they set the agenda, they set the bills that people vote on, and they decide what the order of business is for the day. So when the opposition take control, they can decide, they can bring forward anything and have a vote on it. So that's what they did. So they did that so that today they can have a vote that prevents a no-deal Brexit and compels Boris Johnson to ask for an extension. And this is right in the middle while he's negotiating with the EU, and he's trying to take a hard line with the EU, saying if you don't give me a better deal, then we're going to leave with no deal. So basically Parliament is taking away his power to do that and his power to negotiate with the EU for that, just because they don't want to risk a no-deal exit, because they think that that's what he's gunning for. Now, you would think if that, so there's going to be quite an important vote today. So you would think if that got through, that would be the end of it, wouldn't you? But that's not true in UK Parliament, in politics, because we have an upper house that we didn't elect called the House of Lords. They are there to advise the Queen. And we have all sorts of lovely people on this in the House of Lords, hereditary peers who are not allowed to be women, bishops. It's a lovely bunch of people. Anyway, they have the power. If they don't vote for the bill as well, it doesn't happen. And they can filibuster it. They can, a couple of the Conservative members of the House of Lords can stand up and talk so that the bill runs out of time and it doesn't get passed. But if it does get passed in the House of Lords, you would think that would be it and a done deal, wouldn't you? But no, apparently there is still talk that then Boris Johnson could persuade the Queen not to give the bill royal assent because it's not a government bill. And believe it or not, that could still happen. So here we are in 2019, and the Queen is going to decide whether we leave the European Union or not. You couldn't make this up, could you? So it's a long, long, long way from democracy. But anyway, so that's where we are. So the net of what's going on is it is making the chances of a no-deal Brexit very much less likely, because there are all of these hurdles. It makes it much more likely there's a delay. It makes it much more likely there's an election. And so if we consider that the pound has been beaten down and it's down at these levels at 120 because of the chances of a no-deal exit, then we have to say that if that possibility gets reduced, then we're going to see a rally in the pound, and that's what we're seeing today. Now, normally I would say, well, the dollar's been really strong. Would you really want to buy the pound against the dollar in this instance? And I would say probably not. But when we do look at where we are on the monthly chart of a pound dollar, we're at a really big deal low. We're retesting, the referendum lows, which everybody thought was like worst case scenario. And so here we are. Technically, if we bounce from here, then where would we have resistance? I'm looking at a monthly chart. And we've got this big, huge Maribosu candle down. I would say 50% of this monthly move, open, close. It's a proper Maribosu with not much of a tail, top and bottom. Then the 50% of this would be where my first resistance would be at 124.23. So 124.23 on the daily is where I'd be looking for. And we're looking, aren't we, quite double bottomy swing failure pattern. So I would mark 124.23 as potential resistance. And then I would also look at fibs from this last swing lower for a target that way. And if I put them on this way, then let's see where that takes us to. So this previous swing high is the 236 fib. That's going to be important resistance, 122.95. So 122.95, then 124.23, and then big round number 125. So that's where we look to bounce to in the pound, and this is why this is bid. So at each stage, it looks like it's going to pass today, obviously. But remember, we still have to get through the House of Lords, And if it gets through the House of Lords, that will be another reason for the pound to rally. And then if the Queen gives the bill royal assent, so that Boris Johnson is compelled to ask for an extension to Article 50, then that could also be an excuse for the pound to bounce. And even if, believe it or not, he's threatening, obviously, to call a general election if that happens, because he believes he can win in an alliance with Brexit. So that still postpones us leaving the European Union, and so we would still be looking for a bounce on that. If I look to where the 200 moving out, if you were asked me really where do I think we come back to, we had really big support at 127, between 126 and 127. 50% of this last swing would take us back there, and we would meet the 200-day moving average. So with all of these things coming, I think that there in the pound dollar is a potential for a bounce back to 127. But I'm going to go back to my monthly chart, because my money says that we could potentially be seeing a shark pattern, and this rally will take us to an election. But if we have an election which is won by a Conservative Brexit Party alliance, then 116.50 is where I eventually think that the pound will bottom in this big sequence that we're in. I think that this, if we take it from the 07 highs, this was our first leg, and then we had a big ABC and 5 ways down. I think we're looking for a correction, not as long as this, but 116.50 is where we end up for my money. If I measure the legs, it doesn't quite, we're around the 61.8. It doesn't add up right now, but I think that that's potentially what we're looking at. But for now, we're looking at pound strength. Now, everybody's talking about the value of the pound against the dollar, but I really do think that the value of the pound against some of the other currencies, particularly the euro, is more interesting, and there's more interesting setups for me in this chart. So if I take a look at the euro British pound, let's start with that on a monthly chart and see where we are. And you can see that we're in an area, we've reversed in an area of really important previous highs on this monthly. If we bring this down a little bit, in fact, this looks like a triple top, because we've never managed to close above this first high at 92. Okay, and we've run the stops above it each time, and we've been in this sideways range, but we are now getting firmly rejected against the top of it. Last month's candle was a bearish reversal candle. It wasn't on the monthly a perfect reversal candle, and the reason for that is, when you look for this candle, if this candle closed more than 50% down of the previous green one, it would be called dark cloud cover, and that's where you make a new high and then you close down more than 50% of the previous candle. And if we mark this here, you can see that we didn't quite do that. 50%, let me see, I've got all this mess going on here, I can't see anything, there we go, 90.20. Okay, and the close here on this candle was 90.32. So not the bearish reversal, but still, this is still a shooting star. If we break the lows, and if we break that 90.20 level, that will be a bearish reversal, and we would look for a bigger move lower. So that's going to be key. So now when we look at our bear flag, on the daily, here we've got our bunched up daily moving averages and what looks like a bear flag. We know that a close below 90.20 would be our confirmation level. We're at 90.51. So the first place that then, when this bear flag breaks down, if it does in volatility, the first place that it will go will be the previous lows. But then we know that a close below 90.20 would be confirmed bearish reversal for us. And our first target, if we go all the way out on this one, would be this big 236 fib level and the 200-day moving average at 0.8826 on a breakdown. So a breakdown below 90.20 gives us a downside target in the euro pound at 88.26. I just wanted to talk about a couple of other pound charts that I think are really interesting, and we'll look at stock indexes. First off, I think pound Swiss franc. Double bottom here, monthly. This is a monthly chart again. We're starting on monthly swing failure pattern, and down here at a big 886 fib, retrace level. We're holding this 886 fib level on a retest perfectly. When you bounce from an 886 fib level, your target is always back to the 50% of the same swing. So if I look at this, you can see, I'll make it all the same color. You can see that that's exactly where we went. We hit our target on the first swing. If we double bottom again and we make this a range trade, which clearly pound Swiss likes to do, you know, we went back and forward in this range for quite a long time, then the upside would be back to 135.42. If we don't, and we're just going to make a fifth swing lower, then, so see how this was 1 and then 2 and then maybe 3, then we should look for fib retraces of this for a minimum. And so I'm going to say probably 38.2 and 236 fib. So we'll put our fib levels on here. So you can see, I'll take away that 886. So you can see this 236 fib level from the highs is where we've been stuck. So a bullish on the daily here, a bullish reversal in the pound Swiss franc would be a move above 1.2088. And if we do that, we're going to be looking for up here for the 61, probably towards the 50, 61.8, the daily 200 moving average, 125.50. So looking quite interesting if we can break out from this congestion in the pound Swiss. Nice upside targets. Another one that I have been looking at that I think is really due for a reversal is the pound Canadian. So we'll just pull up the pound Canadian dollar. Again, now this is another chart where we're bouncing from really key support from the pound Canadian from 2016. You know, this kind of 160 area has been really good support. If we look at it on a monthly, you can see that on a monthly we've really been well supported here. What I like about this is a 786 fib. Now normally when you reverse at a 786 fib, your first minimum target would be the 38.2, which is up here. And this would also be the monthly, look, 200 moving average. So what's interesting about this is if I measure from this lowest low to lowest high, and this is a big ABC, so we've gone ABC up, ABC down. If we then make another ABC up, look, that takes us to our 38.2 target. So I really like this one because it has the biggest upside potential, the pound against the Canadian dollar. So what would confirm a reversal here? And what if this just is going to be, you know, 5 waves down? 1, 2, 3, 4, 5. Where would that resistance come in? Well, clearly I think these lows, and the most common retrace of a wave 3 is obviously the 38.2. So our really tricky resistance comes from these lows and the 38.2 retrace of this most recent swing. So 1.66. So we can say if we buy dips in the pound Canadian, our first target or major resistance that we need to overcome is 1.66. And if we do, we should see continued upside and get to our target of 1.86, which would be enormous. Okay, so let's go back to the daily and see how we look here. Because we've got a lower high, but we've been held down by this daily 50 moving average. Whenever you get above the daily 50 moving average, though, you should see a decent move. So does this line up with Fibonacci resistance? Yes, it does. These previous highs, look, from August are the 236 fib. So we're looking to overcome this 236 fib to get going higher, and then 1.66. I really like this one. A close above the daily 50 would be really bullish. So need to look for lower time frame entries around these votes. You know, if we see a pullback to support, probably in this pound Canadian, that would be around 161.50. So that one's looking really good for me. And then Rowan wants to look at the pound INR. So pound Indian rupee, just like all the others, we're going to start on the monthly chart. And doesn't this have a good look? Okay, even if this is just a correction, this monthly 200 moving average is the business. So we've gone ABC down, it looks like A, and hopefully this is B leg complete, and we're going to look for another wave higher from here. Ryan says, this is big picture view from April 17. yeah, so he's putting fibs on from here, and he says, so this is our April 17 rally. We're going to put our fibs on. We're bouncing from a 786 fib level. He is correct. So for us, getting above the 61.8 gives us a minimum target of this 38.2, which is at 91.25. So looking hugely good for this one, I think. And if I'm not correct, this fib level was really well respected. So I think we can lean against it. And here, this daily bullish flag breakout looks lovely, doesn't it, for a long. So pound against the Indian rupee, lovely setup here. Breaking higher. Buy pullbacks. But yeah, looks really good. And we should go from here to 91.25 minimum target. May go a little bit higher, squeeze to 94, which would be the 236. But yeah, I love it. I think it looks fantastic. Look at these daily moving averages. It's all set up. Momentum's on our side. Everything's set up to go higher in the pound, Indian rupee. In fact, I think the pound is going to outperform quite a lot of currencies from here. Now, normally, I say normally because there's not really much normal in this market, but normally a rally in the pound would be really a rough deal for the FTSE. And the reason for that is that the FTSE has so many indexes that are foreign owned, so they earn money in foreign currencies. And so this is why I think that we see the FTSE pulling back a bit the last 3 hours. It did have a proper squeeze higher this morning, but now, it's pulling back a little bit. I think the FTSE 300 is a much better indicator, but all of these indexes to me look like they've got to move higher in them. I am going to talk about the DAX because, this isn't averting a no-deal exit is very good for German manufacturers. Let's be clear. 1 in 7 cars made in Germany is sold in the United Kingdom. So what we've seen in the DAX this morning, and normally a weak euro would see the DAX on the back foot. What instead we've seen is a breakout from a lovely bullish flag pattern here. We've got a big inverted head and shoulders pattern in this DAX. And our target takes us back to 12,118, which is the 61.8 retrace from the highs that we made in July. It's also, and the DAX loves a 61.8 retrace. It's also, if I zoom out, I was on the hourly, a retest of this breakdown trend line level. So we need to be a little bit careful here because we're in the area of the daily 50 moving average. In fact, we're touching it. And what if I measure from this high? It's a tricky area. The DAX has a little bit more room to go higher to 12,118, but I would only get bullish beyond that if we manage to close the day above this daily 50 moving average. I think more likely we rally from here, bang our head, and we close underneath this 50 moving average, which at the moment is at 12,067. So let's watch out for that. Approaching major resistance in the DAX after a big gap higher on the open. The level I'd be looking to sell is 12,118. All right, I hope that is useful.